Greetings, stock enthusiasts. Another trading week has begun, and we are excited to delve into the latest financial and stock market news. We will provide a comprehensive overview of the most significant events shaping the markets this week, as well as an in-depth analysis of the previous week's developments. Additionally, we will be examining 3 of the hottest stocks making headlines, so you can stay ahead of the curve. It is crucial to acknowledge that the information shared in this podcast is for educational and informational purposes only, and should not be treated as financial advice. We encourage you to conduct your own research and seek guidance from a financial advisor before making any investment decisions. We deeply value your feedback and support, so please don't hesitate to hit that subscribe button, leave a comment with your thoughts on this week's report, and give us a like if you found the information helpful. With that, let's dive into the exciting world of stock market news and analysis. It's been a tough week for the Dow, suffering its worst since June, as U.S. stocks ended sharply lower on Friday after mixed signals from the February jobs report and ongoing concerns about contagion in the banking sector. The S&P 500 also experienced its biggest weekly percentage decline since September, while the Nasdaq saw its biggest percentage slide since November. The Dow Jones Industrial Average dropped 345 points to close at 31909, its 4th straight day of declines. Investor concerns over the banking sector were further heightened after the closure of Silicon Valley Bank by the Federal Deposit Insurance Corporation, Citigroup, and J.P. Morgan Chase were all impacted by the worries over the banking sector. The U.S. employment report for February showed the labor market continued to grow at a robust pace last month, with the U.S. economy adding 311,000 jobs, more than expected. The unemployment rate also ticked higher to 3.6%, helped by an increase in the labor force participation rate. Although the employment report was positive for the equity market, it was overshadowed by concerns over the banking sector. Fed Chair Jerome Powell said earlier this week that the totality of jobs and inflation data would determine whether the central bank would go back to raising its policy interest rate by another 50 basis points at its meeting later in March. After climbing earlier in the week, odds of a 50 basis point rate hike by the Fed have moderated over the past 24 hours. Companies in focus included SVB Financial Group, the parent of Silicon Valley Bank, which saw its shares halted for volatility after falling 60% on Thursday. Barnes & Noble Education Incorporated climbed 7%, while Oracle Corporation shares dropped 3.2% after the software company's fiscal third-quarter revenue fell short of Wall Street expectations. And now let's dive into the latest news and updates about the commodities markets. In Monday's Asian trade, oil prices ticked up, reversing an earlier week start, as a recovery in Chinese demand and a weaker dollar provided support to a market rattled by the prospect of possible further U.S. interest rate increases. Brent crude futures were up 25 cents to $83.03 per barrel, while West Texas Intermediate crude futures ticked up by 23 cents to $76.91 a barrel. Gold prices hit a one-month high on Monday, recovering sharply from recent losses as markets bet that a burgeoning banking crisis in the U.S. will push the Federal Reserve into softening its hawkish rhetoric in the coming days. The dollar fell sharply against a basket of currencies, while an inversion in the yield curve lessened after the failure of Silicon Valley Bank. Let's take a look at the most important events happening this week. Monday has no major economic releases scheduled. On Tuesday, the Consumer Price Index will be released for February, with a year-over-year expected rate of plus 6% versus plus 6.4% in January, and a month-over-month rate of plus 0.4% expected versus plus 0.5% in January. Wednesday will see the release of the MBA mortgage applications, producer prices, and the core PPI for February. On Thursday, building permits for February are expected to be at a 1.238 million annualized rate versus 1.339 million in January, and housing starts for February are expected to be at a 1.31 million annualized rate versus 1.309 million in January. Initial jobless claims are expected to be at 205,000 versus 211,000 last week, and the Philly Fed Manufacturing Survey will also be released. Friday will see the release of industrial production for February, with a plus 0.4% expected rate versus 0% in January, and the preliminary March reading of the University of Michigan Consumer Sentiment. In terms of the earnings calendar, notable companies releasing their earnings this week include Lennar, Adobe, Dollar General, and Williams-Sonoma. Let's pivot our focus from the upcoming events and zoom into the 3 sizzling stocks that have captured everyone's attention and are often searched for on StockInvest.us. For a comprehensive analysis of these stocks, you can easily look up their ticker name in the search bar on StockInvest.us. Tesla had a modest gain of 0.301% on Friday, rising from $172.92 to $173.44. As more electric vehicle competitors are offering price cuts, Tesla has announced several price reductions in recent months. Now, BYD, one of the most prominent EV automakers in China, is following suit by offering discounts. What does this mean for Tesla investors? On Friday, Apple saw a decline of 1.39%, from $150.59 to $148.50. Later this year, when Tim Cook reveals Apple's new mixed reality headset, he won't merely be presenting the tech giant's latest flashy gadget. The Apple chief will also guarantee that his legacy includes launching a next-generation hardware product that some insiders believe could potentially rival the iPhone. The tech behemoth is expected to unveil a headset featuring both virtual and augmented reality as soon as June, after 7 years in development. On Friday, Amazon's stock price decreased by -1.65%, dropping from $92.25 to $90.73. While Microsoft and Google are the current talk of the town in the AI battle, investors must not forget that Amazon is a serious contender in the space. Amazon has various AI solutions, some of which are not as apparent as others. And to wrap things up, let's dive into our final topic. On Sunday night, financial regulators announced that depositors of Silicon Valley Bank, SVB, would have access to all of their money starting on Monday, March 13th. This came after the bank's sudden failure last week, which raised fears of contagion across the banking system. The Federal Reserve, Treasury Department, and FDIC released a joint statement reassuring the public that no losses associated with the resolution of SVB would be borne by the taxpayer. Furthermore, the Federal Reserve announced that it would offer funding to banks through a new facility called the Bank Term Funding Program, BTFP. This program will help ensure that banks can meet all depositor withdrawals, essentially backstopping all deposits, both those insured and uninsured, across the U.S. financial system. Loans of up to 1 year will be available to banks, savings associations, and credit unions pledging U.S. Treasuries, agency debt and mortgage-backed securities, and other qualifying assets as collateral. The BTFP is an additional source of liquidity against high-quality securities, which eliminates an institution's need to quickly sell those securities in times of stress. This provides much-needed stability to the banking system and prevents panic among depositors. The Federal Reserve is closely monitoring developments in financial markets and is prepared to address any liquidity pressures that may arise. The central bank said in a release that this action will bolster the capacity of the banking system to safeguard deposits and ensure the ongoing provision of money and credit to the economy. It is worth noting that the lending facility is designed by the Fed to cover all insured deposits in the U.S. banking system and will be backed by a $25 billion exchange stabilization fund at Treasury, which officials do not expect to tap. This means that banks can be confident that their customers' deposits are safe and secure. During a call with the media on Sunday evening, Fed officials stressed that these actions were designed to provide more liquidity and reduce contagion, which should help prevent contagion to small, medium, and large banks. The Fed is not purchasing securities at banks, rather, it is only lending against their book value. Fed officials also stressed that no bank is being bailed out, but banks are instead receiving longer-term liquidity at a higher valuation and lower risk. Despite these measures, there are still concerns about other institutions that have similarities to Silicon Valley Bank. Treasury officials noted that concerns about depositors at those institutions remain. The government will continue to monitor the situation and take action as needed to ensure stability in the banking system. In conclusion, the failure of Silicon Valley Bank highlights the need for a strong and stable banking system. The actions taken by financial regulators show that they are committed to safeguarding depositors and preventing panic in the financial markets. The Bank Term Funding Program and other measures will provide much-needed stability to the banking system and prevent contagion from spreading to other institutions. While there may be concerns about other institutions with similar risks, the government's swift response to the failure of SVB gives confidence that the banking system can weather any challenges that may arise. Thanks for tuning into StockInvest.us. We hope you found this video helpful in your quest for informed investment decisions. Remember to keep an eye on a stock's fundamentals, financial health, industry trends, and any relevant information or events that may impact the stock price. If you have any questions or comments, feel free to reach out to us via comments or our social media channels. We'll be back next week with more analysis and insights, so stay tuned. As always, please keep in mind that trading involves a high risk of losing money and that you should speak with a financial advisor before making any investment decisions. The information provided on StockInvest.us should not be the sole basis for your investment decisions, and any use of the information provided is at your own risk.